The most important thing is what's happening with AI and innovation. There is a powerful CapEx boom that's underway in the US economy tied to this innovation that's coming. There's productivity that's going to come and change our lives from this new technology, that it will accelerate economic growth. We're very encouraged about what's happening in the 401k space. Well, we happen to have two pools of $12 trillion each. There's something called defined benefits. Think of that as traditional pension plans. The management of those plans allocates about a third to private assets. On this side, you have the 401k market with virtually no allocation. When you say, why should individuals have exposure to privates? I'd argue two things. One, the data is pretty powerful on higher returns for those funds who have allocated. The second benefit is diversification. Nearly 90% of the companies who have more than 100 million in revenue are private. The vast majority of real estate is private. The vast majority of infrastructure. So you're getting exposure to things you otherwise don't have. A lot of commentators talking about the lack of PE exits. The good news is we're starting to see things shift. We're seeing market stability and market confidence come back. I would say the transaction environment is really starting to pick up. You have a lot of folks who haven't been able to sell businesses who want to transact, and it feels like deal activity is going to pick up. But because of the number of sellers, the pricing feels like it'll be reasonable. The other factor that keeps pricing reasonable is that the cost of debt capital is still elevated. And that makes it hard to pay sellers very high prices, and it keeps things from getting out of hand. I think what folks forget, it's when debt is super abundant and low cost that people tend to pay that on to the sellers. So you have a moment here where you have a lot of people who've been looking to exit assets. Pricing for most things is reasonable. And so we can step in and buy high quality companies and find ways to add value. And when I look at the deals we've been doing, certainly the last 6, 12 months, they feel very good. And we're tending to do it in some of the neighborhoods we love: franchising businesses, energy transition related businesses. India has been a place that we've really loved. Japan is reemerging as a market where there's a ton of opportunity as well. Life science service businesses as well. So there are sectors that we have high conviction around, and we can buy good businesses at reasonable prices. And that's what's making us want to lean in more on the private equity front.